Yeah, well, good morning, everyone, and welcome to today's Aaron's 5 key SMSF strategies for 2021-22. My name is Daniel Tramontana from BGL Corporate Solutions, and I'll be co-hosting to an extent with Aaron Dunn from Smarter SMSF. Welcome, Aaron.
Thank you, Daniel. Great to be a part of RegTech again. But I try to think how long I've actually been a part of these events. Yeah, obviously in their former life with the product update days, but it's got to be the best part of 10 years now, and they are getting bigger and better. And hopefully we are back on the road again in October.
Well, interestingly enough, we've probably had an association for over 20 years now.
Yes, that would be correct. In my practice life, yes, without question. I was one of Matt Croft's very early beta testers as well. So yeah, the history goes back much longer than the product update days as well. Absolutely.
And look, and just with those that are attending today, you're in for a treat. And having worked with Aaron and knowing Aaron personally on a personal and a professional front, Aaron is an incredibly well-versed SMSF presenter and speaker, knows his stuff. I know that I personally use him for my documents and things that I need done, and I can always rely on getting the right advice in the right direction when it comes to my SMSF. So thank you for what you do for me, Aaron, and I'm sure for many others. But today we're going to be going into Aaron's 5 key SMSF strategies for 2021-22. And what we're going to be looking at is a number of things, and Aaron's going to cover these to some detail. We're going to look at the state of play in the SMSF space and some of the developments and key changes that have taken place. We're also then going to just look at what opportunities exist within the SMSF space, how you can manage and mitigate the risks. And a part of managing risk is understanding the risks that are out there, and Aaron will cover both of those. And then what we're going to do is we're going to go into a little bit about the best practice solutions, what the great administrators and people who are doing compliance work are using when it comes to their document space. And what else we're going to look at also is just how specialist solutions have developed to help you better your SMSF offering. And then lastly, Aaron has very kindly put together a special offer as part of BGL RegTech 2021 for the participants of this webinar. And I'm sure that you'd love to hear more about that later on. Now, as part of the presentation, what will happen is that you can ask questions. I'll be moderating and monitoring those questions. And when the opportune time comes, then I'll ask those questions of Aaron. However, what Aaron has also done, if there are a list of Q&As that come through that we don't get to, and even those that we do get to, what Aaron will do at the end of this is put together just a small podcast, which will cover those questions in detail, and we'll make those available to you also. So Aaron, thank you. I'm looking forward to this presentation and what you have to say. And thanks always for just being an amazing ambassador for all of us in the SMSF space.
Yeah, pleasure, mate. Thank you very much. Thanks very much. And yeah, welcome everyone to today's session. As Daniel has said, in terms of the agenda today, it is very much about you understanding what is current and therefore what we need to be focusing on and best managing as we move into this new financial year. Now, quite clearly, when we started putting these slides together, we had a view, just like Daniel did, that we were more than encouraged by COVID at that point in time, and we're even going to be doing some face-to-face masterclasses to really piggyback off the back of the BGL RegTech events, so getting around Australia, because as much as I love talking to a screen like this, I actually thrive more than anything getting in front of an audience as well. But like all things, we need to remain pretty fluid in this current environment. So what I thought we'd do today is just take a little shift in terms of how I've approached these 5 key strategies and really helping you understand the landscape for you as a practitioner. So yes, we need to understand technically where we are at in these different areas, but what does it actually mean and how do we actually use that information when we talk to our clients as well? And what we see within the industry, and in particular with people that are using our training and our documents, are very, very different. So we do see real specialist businesses that would be ordering hundreds of documents each and every year really look for that consistent utilization of documents. They have the knowledge and therefore they are looking for that automated flow through. And I'll show you a little bit later how that can be achieved through the integrations that we have with Simple Fund 360. And then others really want to make sure that they have the support that they need to be able to then take that next step, to be able to order documents and so forth. And again, we work with a broad number of practices, whether you are someone that maybe is more generalist in your SMSFs and really need that technical support and help and training to go with it, along with the documents, or whether you are far more in that specialization area, but you just want to really leverage and scale up that level of automation and efficiency, again, which our product solution really does. So let's get stuck into today's session. And first of all, I really wanted to help you to understand the current state of play. So where are we today when it comes to a number of key issues that impact the self-managed super fund landscape? Because the last few weeks or month or so has been really busy in the SMSF environment, because what we have seen right before the end of June was finalisation of a number of measures here. So one of those was the fact that we had a bring forward period for 65 and 66-year-olds that had remained outstanding by and large for the entire 2020-2021 financial year. We had seen previously the amendment to allow for an individual in that age to be able to make a non-concessional contribution without having met the work test, but it didn't apply to the bring forward rule. Now that has become law on the 22nd of June, 2021. Now, of course, we have finalized that financial year, but it is important to note that we now do have a framework where someone 65 or 66 at the 1st of July, 2021 is going to be eligible to be able to utilize that bring forward for this current financial year. Now, as part of the negotiation of a number of measures, we have seen some changes also introduced as part of the finalization of this and some of these other bills. And that includes the concept of a COVID recontribution. So this is where someone who had previously taken out money that qualified through that COVID compassionate grounds early release payment to now be able to make that contribution back into the fund from the 1st of July 2021 through to the 30th of June 2022 and not have that amount count towards their non-concessional contribution cap. And the other thing, and this was all a part of Senator Pauline Hanson in her negotiation, was also successful in removing the excess concessional contribution charge. So where someone might have SG that based upon their level of salary is greater than the what would be the 10%, so it pushes them above the current $27,500, there will be no excess charge on top of the amount that needs to be refunded to them. Now, the other thing that we've seen is the fact that we now have, from the 1st of July 2021, an increase in the number of allowable members in an SMSF from 4 to 6. So again, this was something that received royal assent on the 22nd of June and therefore applied the quarter following royal assent having been received, which therefore in circumstances like myself at Smarter SMSF with our document suite and even the team at BGL, we've had a huge amount of work to be able to make the changes necessary to allow for this increase. To give you some context, there's over 400 or 500 document templates we've needed to update. We've got 50 or 60 forms that we need to go through to allow for that additional combination. Now, of course, how many of those did you think we've set up in the first few weeks of establishment? Not very many. So it is a bit disproportionate in the level of work that we need to do to the number of people doing it. However, as would always be the case, if we hadn't have done it, of course, someone would want to put that into effect. So we have seen at the moment the ATO have also noted at this time there is a separate process because they are updating their systems to allow for those additional members where you are establishing a fund or need to make the change of details, of course, to advise the ATO of any increase in the members as well. So we have those documents now available and reflected and updated both on our Smarter SMSF platform and also within BGL, applying to not only the new fund, but for any incorporation of a special purpose company also around trust deed updates and the addition of members to allow you to add members into the fund as well. The other thing that we did see as well, and this was regulations that were registered again in the last week of June. This temporary 50% minimum pension has now been extended for this current financial year. So it's quite a simple amendment. We didn't need to see this go through the Parliament, so both houses of Parliament, because it is an amendment to the regulations. So that instrument becomes registered, and ultimately we are making an adjustment and including an additional financial year into Schedule 7 there that extends that 50% reduction. And that opens up a number of opportunities for people to consider, and we'll touch on that a little bit more shortly. The other things we also note that are currently on the radar is that Treasury has gone through its consultation process to reduce the red tape measures for ECPI. Now, this is looking at two things. One is an amendment to the disregarded small fund asset rules. So if you have a scenario whereby a fund is 100% earnings tax exempt, so we have 100% tax exemption in the fund for the year, and we move up above the $1.7 million or 1.6 million, I should say, and we therefore would need to get an actuarial certificate for that 100%. The idea is that that will be removed by virtue of an amendment to the disregarded for small fund assets definition. And the other thing is where we would have a choice in using either what we refer to as the old method of tax exemption, so where it covers the entire financial year in terms of calculating exemption, or whether we apply the current method, which has a combination of segregated and unsegregated periods. And this choice method applies in that scenario where we have both in a financial year, unsegregated and segregated periods. So as I said, that's a consultation that has recently closed, but is to take effect from the 1st of July 2021 and will therefore impact our 2021-2022 SMSF annual return. But once this law comes into effect, maybe some of the planning will be absolutely relevant in this area. And the last one here that is important is just around the electronic execution. We have seen a huge uptick in the number of trustees utilising electronic execution measures, both in the execution of deeds and then obviously in financial statements and other decision making. Now, what we have seen is the government's commitment to introducing permanent measures around the signing of deeds and documentation. So this, in the first instance, was a bill that was to extend the current temporary measures, which were through to March 2021 through to September, giving a period of time to allow for government to finalise the outstanding matters as part of consultation and the like. And then we would, in essence, have those come into effect on a permanent basis. The problem, however, that we have here is that this measure then lapsed. Now, there is a review going on because some items did get referred to a Senate Economic Committee. But we do also, whilst those measures have lapsed from a corporate trustee's perspective, there are some state-based measures that will allow for electronic signatures to continue on.
Aaron, just a quick question that's come up from Gary.
Yep.
With regards to the COVID recontribution, do you think that the ATO released an approved form? Because they did do it with the downsizer contribution. Do you think they'll do the same thing here?
Yeah, 100%. So this is, if you think about it logically, the way in which it will work is it's done by way of form. So it will ordinarily count as a non-concessional contribution until you advise otherwise. So it's, yes, it's how it works with the downsizer. And yes, it's how it works with a CGT cap amount. So the natural flow on is that that's the way that it will apply. And we'll get more detail, obviously, as it comes to hand. And the other thing from a regulatory point of view is, of course, this big ticket item around the finalisation of our non-arm's length expenditure view that the ATO has here on the application of our non-arm's length income rules that sit within section 295.550. So the real interesting piece to note here is that we did see an extension to the existing transitional compliance. So what we're looking at here is where there is a cost that is less than what has been, what is a market value, or the cost is zero, but there is a sufficient nexus to all of the fund's income. So for example, you as an accountant are using your Simple Funds 360 software and produce the financial statements for your SMSF using the software that belongs to the firm, and you don't charge a fee, or you're not charging a fee that is what you would charge to the public at large. So the issue here is that if you don't charge a commercial fee, the current view, not yet finalized, of course, is that you taint all of the fund's income as non-arm's length income, because there is a sufficient nexus to all of the fund's income to undertake that compliance task. So this applies to all accountants, it applies to financial advisors from an investment strategy review point of view, and a number of others. So this is why we have this PCG in place that says, look, you don't need to take any action yet whilst we seek independent specialist advice as the regulator from the Public Advice and Guidance Panel. Now, the current framework on the ATO site is where they were expecting this to be completed in July. It has continued to move forward. So at this point in time, this is the most recent thing that we have, and this is what we have to rely on. But what I guess I'm trying to impress on you here is that there are a huge number of areas that we need to keep on top of. And what we do at Smarter SMSF, and we've done this through a partnership with BGL, with our SMSF Foundations course and other training that we do, is keeping up to date, we know, is one of the greatest challenges for professionals today. How do we know? Because we've done research on this previously through our Future of SMSF report and the like. So we do have quite a significant number of people now working through our SMSF Foundations course. And then we do also have available ongoing training, our Changing Face of SMSF, as one example of technical training that we provide on an ongoing and quarterly basis to keep you up to date with everything that is going on in the SMSF sector.
So Aaron, just briefly, I know that there are a number of participants on here, but maybe if you could just take a minute to explain your SMSF training course, and if people are interested in it, maybe we can send out a link about that, because I think it's a fantastic initiative for people to know about and to have their sort of incoming and intermediate SMSF people
absolutely
trained up on it.
Yeah, good idea. So what I might do is, I think I've actually got it open. So let's move over here. So what you can see here, and some of you may have been in the webinar that Daniel and I did recently as well, but from within BGL's learning channel, you have the ability to go in and access the SMSF Foundations course. So this can be purchased on the system, and it is made up of 7 modules going through all of the key areas of managing and successfully working through and completing your SMSF work for your clients. So from a basic about super and then the definitions of SMSFs, but going right through into investment rules and contributions, paying benefits, tax, reporting, and estate planning. So this is 21 CPD hours here, accredited as an SMSF Association accredited advisor, Smarter SMSF, and allows you to work through these topics at your own pace. And each of these have obviously a module for you to work through. They have an assessment at the end of each module, and upon successful completion of each of those, you have the ability to then access that CPD certificate. And within each module, and you can see here, I won't spend too much time going through each of these, but it has a combination of video and audio and activities, and then also significant workbooks for you to actually go through as well. So this one here on tax is 57 pages of content, in addition to the training materials that you would work through in the videos, all fully mobile responsive as well. So this, we have a special arrangement with BGL for you to be able to do so. And again, you can go into the learning channel from within your Simple Fund software to be able to access that course at any point in time. So that just gives you a little bit of insight as to what we've been doing on the training front there. So let's now move into our second area, and this is around identifying our SMSF client opportunities. So what are some of these new opportunities? And the one thing that I want to impress on people more and more and more is that we are creating a far more flexible contribution landscape than we've ever had before. Finally, we're seeing some increases again to the contribution caps. But what we also note is the breadth of how we can make contributions continues to increase. So we do have our carry forward unused contributions. Don't forget those. So anyone who is ordinarily available from 18 years of age would be able to make contributions using this and had built up over their lifetime already a couple of years worth of unused amounts. Well, 19, 20 and 2021 now. So as long as we can get that TSB under $500,000, that individual will be eligible to make that contribution on the basis that they're under 67, or if they're over 67, they would meet a work test or work test exemption if their TSB is under 300,000. Recontributions are still quite significant as a strategy to be able to use because of not only the ability to take advantage of our bring forward period of 2 or 3 years, subject to an individual's TSB, but we now have this couple of years window between 65 and 67. So someone may continue to work all the way through to 65 and beyond, but the condition of release is now satisfied at that point in time that frees up access to their superannuation that may allow them to refresh what is taxable component money into tax-free money as well. And whilst that might not do anything advantageous for them individually, from an estate planning view, it's an entirely different landscape there. The other thing, of course, is you could be coupling recontributions and contributions with downsizer contributions. So in the current environment, we could be, with the sale proceeds of a family home, we could not only be getting $300,000 of downsizers for a husband and wife, but if their total super balance is under $1.48 million, we would be able to also get in non-concessional contributions of $330,000. So we're looking at $1.26 million of money into superannuation, which is a huge amount. We're going back to some of the old days there. As long as we know how to utilize these different rules in tandem with each other to really capitalize on those opportunities. And we will continue to see these things also be employed around our transfer balance cap equalization. So quite often we will see disproportions in benefits between, say, a husband and wife. So we may look at these withdrawal and contribution type strategies so that we can try and create an equilibrium with our $1.7 million transfer balance cap. And the other thing is, with this extension of the temporary minimum pension for our 2021-2022 financial year, we also want to understand what level of income they may be taking from the fund as benefit payments, and how, therefore, we may treat those above minimum amounts for a financial year. There may be the opportunity to claw back some of those amounts as commutations that would strike a debit against that individual's transfer balance account. They may have accumulation benefits, but there is a real pecking order that we need to go through. And most importantly, we're putting that documentation in play to ensure that we get the right and best outcomes for our clients. And the other thing that is worth noting is that we did see a number of measures get announced in our 2021-2022 federal budget that is going to impact super and also more specifically SMSF. So whilst this is not yet law and we will need to follow the path as to how these may transpire, you can start to be talking to your clients about these. If you have clients that have legacy pensions, defined benefit income streams, market pensions, we are going to see a 2-year amnesty here to unwind these. So whether it is going to be beneficial, whether there is any Centrelink implications of doing those, we're seeing changes to the residency rules, and therefore whether there's any changes that may need to happen around existing legal personal representative or enduring power of attorney arrangements. We're seeing a removal of a work test as well. So there are a number of opportunities, and downsizes is the other one from 65 to 60. So there is a significant number of things that you can be talking to your clients about, in addition to the opportunities that I've presented on this page as well. And of course, I mentioned earlier on our ECPI choice. So this could be absolutely advantageous where you have clients that may be selling assets during a financial year, but still making contributions in with income streams and working out, well, what will be the best method for us in claiming tax exemption this year. And therefore, we can manipulate the result that we want here to allow for a choice that will provide the best tax outcomes for our clients. And like I said, we are still waiting on the finalisation of that. We have seen draft regulations and go through a period of consultation, but it is to take effect from the 1st of July 2021. So there are a huge number of things that we can really be working through with our clients and thinking about, and most importantly, taking advantage of. But what that means is that it means that we need to be thinking about how we are engaging with our clients further. And I mentioned this a little bit earlier on around the relief measures. And this is something that BGL has really been at the absolute forefront of, around digital transformation. And this is now really reflecting in the approach of the government, not only in the signing of documents, and I mentioned that temporary relief and the fact that it is lapsed at the moment, but we've also seen the changes at a state-based level. We've also seen amendments to the Electronic Transactions Act. So since July 2020, where ordinarily the superannuation law is excluded from the electronic transaction regulations, you now have the ability to digitally sign those documents within the confines of the electronic transaction regulations, because Section 35B has been an exclusion to the exclusion of the SIS Act and SIS regulations from that Act. And we are seeing the government continue to move down this path, and through other consultations, their business registers program and other areas, they are now looking at how can we further accelerate digital transformation in this space. And this is going to apply to record keeping. It might apply around the witnessing of documents, where in the future, we may not actually need to see the witnessing of a binding nomination to be valid if we can go through and validly manage and identify that individual as that person who has signed that document. And we know with binding death benefit nominations, it has been a huge issue around process and how they've been signed and executed. And again, a lot of this digital transformation is really changing the way into the future as to how we'll be engaging with our SMSF clients. And like I said, BGL has certainly been at the forefront in this area around digital signing, and will continue to do so, even when we start to think about what you'll be able to do within CAS 360 and director IDs and the like as well. So, but what is important to remember is that we also, with the opportunities, we are aware of the risks. So what are these risks as this third strategy consideration that I've got here that we need to think about and manage for the year ahead? So here's just a bit of a snapshot what we should be thinking about, because we have seen contribution cap increases. So our $25,000 cap has seen this $2,500 increment, which means that our NCC cap has moved from 100,000 to 110,000 as well. But the flow-on effect of that is that it then impacts our total superannuation balance threshold. So we no longer have our 1.4, 1.5, 1.6. We now have 1.48, 1.59, and 1.7. that impacts whether we can do 1 year or 2 years or 3 years of bring forward, or we are actually ineligible to do so. So we need to ensure that we are across the movements here with those total super balance thresholds, and therefore what we can make by way of contribution as well. The other interesting thing, and this is where life is going to get really challenging for many of us, is this introduction for the first time of the personal transfer balance cap. Now, it's not actually the first time, but it's the first time that we've got a divide between the general cap and the personal cap. And what the personal cap is the cap that each individual has based upon the used amounts that they already have reported against their transfer balance account. So in a very simple scenario here, where someone had previously had an $800,000 pension credited to their transfer balance account, their transfer balance account or personal cap isn't going to increase to 1.7 from 1.6, but it's only going to increase by the unused available cap space. So the lowest amount of available cap space that they had. So it's not just looking at it at a point in time, we have to consider the history of what has been reported. But in that instance, that personal cap is moving from 1.6 million to 1.65, whilst our general cap has moved. So you really need to get into your terminology the difference between a general cap and a personal cap. So BGL is working on that. The ATO has been working on updating their site in respect to providing that information as well. The other thing then is that we do have, with indexation of the TBC, that not all areas or thresholds that we do have are actually linked to the general transfer balance cap. Now, NCCs are linked to the general transfer balance cap. But for example, our disregarded small fund asset rules, or our work test exemption, or our unused catch-up concessional contributions are hardwired numbers inside the inside the income tax laws, I should say. So whilst the transfer balance cap has moved from $1.6 to $1.7 million, the disregarded small fund asset rules remain at $1.6 million and will do so whilst our general transfer balance cap continues to rocket up into the future. So therefore, keeping on top of what moves and what doesn't here is critically important to the advice and how you might actually go and do that work. Now, we've spoken about the increase from 4 to 6 members. Again, I don't see a huge level of people moving to this, but we also need to make sure that there will be combinations of arrangements that would look to come in play, increasing family members, increasing business partners and relationships. So it does just create additional layers of complexity in decision-making. And we're already in our deed looking at ways in which we're going to deal with this. We actually ran a webinar ourselves yesterday. So if you do want to find out a little bit more how we're addressing this issue, you can get in contact with us. I've got all the contact details in the back of the slide, and we can get a copy of the recording to you to talk about how we need to manage decision-making into the future. And it's not just related to 6 members. It can go all the way down to decisions that need to be made in a 2-member fund, and in particular, key decisions. So events that are occurring or other important things that might need a unanimous decision as opposed to maybe 50%, or a different methodology for counting votes to be able to make those decisions. And these are things that require far more strategic thinking and knowledge about how we build this out to ensure that clients like you are leveraging the absolute best and what is at the absolute forefront of ideas, not only in strategic sense, but also, again, managing risk. And finally, we need to make sure we get our act together with our SMSF clients for SuperStream, because from the 1st of October this year, we are seeing a mandatory requirement for SuperStream to apply to rollovers in and rollovers out, along with a number of ATO release authorities. So if you are setting up a new fund and you are rolling monies over from an APRA regulated fund right up front as part of the initial process, like you would do with ABNs and TFNs and like, you're going to need to get that electronic service address. Similarly, if you have older clients that are looking to transfer money out, or anyone, regardless of age, looking to transfer money out, and they are rolling it to an APRA regulated fund, we are going to also need to get that electronic service address. So there is, again, going to be quite a big uptick in the number of SMSFs that are going to have to come in and embrace the new SuperStream payment and data standards, as we've seen it expand to a larger number of SMSFs. Because at this stage, of course, we only needed to deal with it with employer contributions where they are not related ultimately. So this is something that I picked off from an auditor, Joel Curry, who I know, and it was interesting because he wrote an article the other day that I read, and just to give you a bit of concept about what auditors are looking for in this area. And again, I thought, well, what a great sort of summary of things that auditors are focusing on. And then I went, well, how are we as an organisation helping to address these issues for individuals and businesses like yourself? So property valuations is going to be quite a significant area in the auditor's eyes for this year. So evidence here is going to be required to support the increase in value that we've seen over the last 12 months or more, and ownership using the ATO's valuation guidelines as well. So one of the things that we've added in recent times is our property use declaration and market valuation minute. So it allows you to evidence that it's a residential property or it's business real property, how it's being used, and then what the supporting evidence is that determines that value, because the ATO have updated in their guidance a a number of things that would be used to support such market valuation. The other thing, of course, is our COVID rent relief, and in particular, how that has been applied for related party transactions. So what is critical and what auditors are going to be looking for is that ensuring that any rent reductions or waivers or agreements are in place and that they are reflective of arm's length. So it may be that we're complying with the mandatory code. So we spent a lot of time at the early stages of the pandemic, really not only understanding the impacts of how the mandatory code worked and how the relief worked, but then naturally built a lot of documentation around that. So again, these sort of things are still available there to do. Investment strategies is a huge area that still has a significant number of people that haven't really, in the required and drafted documents, considered SysReg 409. And again, not only the ATO's focus, but the auditor's focus in upping the ante. And in my view, the regular review concept is now the next frontier to be getting this right. So 28% of all of the documents that we get, nearly 5,000 documents or more across our platform in the last 12 months, 28% of all orders that went through were our investment strategy report. And not only is it the report, the template, but it is also dealing with all the aspects that may have come across your desk with clients, including ATO letters and asset concentration and more. So our next part, and we are working on this already, and we'll be releasing this around BGL RegTech, is not only our investment strategy review statement, but also an automated investment strategy review service. And this is where this sort of thinking now goes. How do we actually not only take a client from getting an investment strategy up, but what are the events that require us to actually review this? And the ATO are being quite clear in their guidance around when they would expect a review to occur, and therefore we would be expecting to see documentation around that process as well. So as an absolute minimum once a year, but there may be multiple periods of time throughout the year, and we're considering all of the elements of SysReg 409. So we're not just saying that we're doing it, we're actually demonstrating that we're doing it. And that is the significant shift that the ATO has put on us, that therefore the auditors as gatekeepers are really imposing as well. And again, it's been our #1 document that we've seen audited not only through BGL and Simple Fund 360, but also through our site as well.
Aaron, just a question here from Cornell.
Yep.
Any insight into how the SuperStream rollover process will actually work in practice? Who will initiate the rollover process?
There is a whole heap of sort of guidance that the ATO has been working through in the design of this. I haven't probably spent all the in-depth of what that has looked at as yet, but I mean, the trigger is going to have to still come from the individual in terms of their request to roll over. And then the question will be, well, on that rollover, there's going to have to be some additional information to ensure that there is information there that is readily available that will enable that APRA regulated fund to be able to pay utilising that SuperStream standard. Now, what I should say is that it is not just because it's SuperStream, that's how they have to do it. They still have their standard know your client obligations that exist around that as well. But the invoking of the process, I still believe, is going to come from the individual who has requested that. And you can actually do that. The whole of request, the whole of transfer balance request can actually be done through the individual's MyGov account as well. So there is going to be a number of ways, but to answer Cornell, the way I see it is it's still going to be obviously triggered in the initial instance by that individual and therefore subject to the information that is provided, which I assume will include an electronic service address in the future. That is the way that things will apply. So let's get moving. The other one we touched on earlier, our non-arm's length transactions. So here, the finalisation that we're expecting of our law companion ruling. So again, making sure that these arrangements are in play that demonstrate an arm's length dealing. The other things, other common issues include things like rental agreements that lack genuine market valuations, and provisions for rental increases and the impact that that can have and taint potentially the income that is derived from that particular asset. And finally, conditions of release. And this is, we've seen individuals who have been impacted by the COVID pandemic, but didn't go through the right processes here to take out that first tranche or second tranche, which will be relevant for this upcoming year, but also around cessation of employment and looking at arrangements to ensure that they are complying with the condition of release for a nil cashing restriction. So that therefore, to be able to move from accumulation phase into the retirement phase. And there can be part 4 application now in respect to that condition of release, because we do have a distinction between what is an accumulation phase at 15% and retirement phase at a retirement phase, obviously it's tax-free. So again, from a condition of release point of view, we do have those documents available. Our COVID early release, if you haven't documented the process that is meant to be following thereafter, and of course, things like our pension commencement documents and the like as well, that naturally incorporate those types of things into the process. So then it comes to managing the risks. So we've talked about what are those risks and then how do we manage it? And this is why, in my view, we're going to, unfortunately, the reality is documentation is going to become more and more and more important. So we are seeing more and more individuals being tested in a court of law around the payment of death benefits in particular, and therefore what the court's views are in terms of how robust that documentation is, or even if that documentation is there. So I've already spoken about this increase in auditor expectation on documents to support the decision. So our COVID relief, our investment strategies, making sure our pensions are on foot. We also know that we have our continuation of legal challenges in dealing with the payment of super death benefits. So number of cases that continue to roll out year on year on year. We have seen cases in recent times where they've tried to test or test out the validity of other cases in different jurisdictions, so in different states, but ultimately they were upheld because of the findings of that original case. And unless something goes to the High Court, then most other states will follow precedents that have pre-existed. So what's the next frontier? To me, it's going to be in pensions in this area, because not only are we seeing challenges on death benefits and binding death benefit nominations, we will be seeing challenges because of the fact that did we actually have documentation in order that may allow for that reversionary to have taken place or not? And if it hasn't, and we don't have death benefit nominations in place, then potentially it does open up the ability for the other beneficiaries to stake their claim. So documentation around income streams and alignment here will become critical. And to me, we're already starting to see a little bit more focus on the payment of income streams and the documentation around that area. And of course, the increase of fund complexity then naturally heightens the increase of documentation we need around this as well. So I've done a number of documents this year around the payment of splits under divorce, so separation agreements, court orders and the like, and then obviously around succession and estate planning. So these are all items that we are going to continue to look to build into our document suite. And I'll talk a little bit more shortly. It's not just about the documentation that you can use to order, but it's understanding the documentation that sits around it that really outlines why you may look at a specialist provider as opposed to someone that has a more breadth of documentation as well. And even just something as simple as one word. So what we have seen from the 1st of July 2021 is this move in our SIS covenant from best interest duty to now a best financial interest duty. And whilst this was not really focused in SMSFs, it is in its application applying to SMSFs. And whilst a mum and dad might not be challenging each other on a best financial interest duty, there may be when we come to aggrieved beneficiaries into the future. So again, documentation, putting all this stuff in order is absolutely critical. So what are the areas that I see in deficiency that create the greatest risks? And therefore, how does our smarter document solution with Simple Funds 360 and BGL more generally help close the gap? So here's a list of things that I've identified. So that from an estate planning point of view, getting the BDBNs in place. So we're not following procedure here with respect to the DBN being put in place and being valid. And what I mean by that is that when we look at cases, it's one thing to have a binding nomination in play, but it's another to ensure that we've followed the rules. Because if it needs to be accepted by the trustee, then we need an additional minute to support that BDBN. Otherwise, that nomination, whilst it's been completed, actually is invalid because the deed hasn't, or we haven't provided or followed the procedural requirement that is within that deed. So Munro's case talked about the fact that we had the wrong terminology in the binding death benefit nomination. Cantor Management talked about the way it was served upon the trustee of the fund. So we're looking at very granular issues here, but it does highlight the importance of making sure we've got this in play. Reversionary pensions, we see sometimes conflict with other estate planning implications. So have we actually aligned up the superannuation estate planning with the general estate planning that would happen with individuals? So making sure that if we do need it reversionary, that we have reversionaries in play. We don't need to necessarily cease and restart that pension. We could be using an add or removing reversionary function, something that we do have available within our Smarter SMSF document suite, or vice versa, where we need to remove that individual. Now, the other area, again, that the courts look at in respect to estate planning is the flow on of our documentation. So we may have funds with 2 and 3 and 5 and 10 deeds. A court is now going back and going, before we even start looking at the particulars of the case, I want to see the thread and trail here of our fund documentation, because we need to work out whether deed number 10 is valid or whether we actually go back and, because deed 3 to 4 was invalid, 4, 5, 6, 7, 8, 9, and 10 are irrelevant. We've got to go back to deed number 3. And that then throws out all of the documentation that may have been done in accordance with deed 10 as ultimately being invalid as well. So ineffective draft or documentation execution here, absolutely critical. Undated, not signed, whether they've been electronically signed when they couldn't, whether deeds are outdated. I commonly see across my desk deeds that go way back beyond 2007, potentially even from 2017, you may have problems in particular areas of the fund. The other thing, we see people who may have got tailored information, but then you go through and do an update, and therefore you've undone a lot of the previous work that was needed. Blended families is a really good example there. So when you look at a deed of variation, what clause is in that deed of variation that would allow for prior documents or agreements to ultimately continue? So if you have a binding death benefit nomination in play and it was done under a previous deed and you know that it's valid, do you have to go and get another binding death benefit nomination that now complies with the original one? Or has the variation allowed for pre-existing approvals to basically carry on into the future? Again, things that you should be looking out for. We've got LRBAs. Again, we continue to see compliance with structures. Again, with our COVID relief, make sure we're documenting decisions around that. Our pension documents, again, I've touched upon this. So inadequate documentation, there is a bit of a risk around just software generated documentation there, because we do get inconsistencies with the deeds. Some deeds require agreements. Some are happy with resolutions. What does your deed say around what is an acceptable form of documentation here for your income streams? We have documents that may not exist or we can't be found. So we have a lost pension deed that helps identify the circumstances, know that we have a pension on foot, and then can re-establish those rules following a decision in Re Narraman's case back in 2018. And then you can see a number of things here as well. For the sake of time, I won't go through each of these, but you can see things like our investment strategies, making sure that they're not too generic, that they give effect to the whole of the fund circumstances. We are regularly reviewing those, so on and so forth. So the last one here is obviously a smarter way. And this is really why we've been chosen by BGL to work with them and to work with you as clients, because we do have a real depth of knowledge. And hopefully today's session was about helping you to see this depth of knowledge that we have as an organization as well. And we really do pride ourselves in that depth of knowledge. You can see there that level 4, that extended thinking. We are not in the space of working through looking at other, family trusts and unit trusts and deed variations to all those sorts of things. We are experts in SMSFs. We have more documents available in this space than any other provider in Australia. And it is all about design and connectivity and looking at concepts. So the concept of what if, what's the impact? How can we formulate a relationship like we have with BGL, where we actually have now embedded that integration inside Simple Funds 360 to enable us to automate different processes, from setting up a fund from a document point of view to setting up a fund inside Simple Funds 360. So these are all things that really require that extended level of thinking. And here's a bit of a summary as to that different level and what we do across a number of documents that are different to many of the providers out there. So from a deed point of view, we're not only looking at the technical rules, and we're not only looking at a strategically focused, well-drafted, strong decision-making powers, we've also got additional things that can become special rules of the fund, how we want to annex documents like our pensions, like our SMSF wills, that they can become paramount documents, that we build automated services that we integrate within Simple Funds 360. With our death benefit nominations, it's not just DBNs and binding noms and non-lapsing, but we can cascade those, but then we can wrap around them things like fund guardians, where you can ensure that the intended consequence of the intended outcomes are there to ensure that the member, what they wanted to have happen, actually does occur. And we don't end up in a situation where there is abuse that occurs through one or a couple of children who may think otherwise, whilst mum or dad have now lost their capacity. Our investment strategy, again, touched on there, we are looking to continue to build out with our investment strategy review statement, which we expect to have in the next month or so, and our review service and pensions again as well, with not only the alignment to the deed, but also with ancillary documents that come around that to remove reversionaries so that we don't lose Centrelink or we don't impact our transfer balance cap and components because of a cessation and restarting of that pension, and dealing again with our above minimums and the integrations that we have. So it is really a level 4 thinking that we do apply at Smarter SMSF and really build on solutions here to help support you as well. So how do we do that? So we do that within 2 key streams here that you can see. So SMSF Foundations course, which I showed you a little bit earlier, how that works, and it is available through the BGL Learning channel. I have the link there, bglcorp.com/SMSF-Foundations. And then we have our Smarter SMSF document ordering process that you can do within Simple Fund 360. And I might just quickly jump over and show people how you can do that. So what you will see, if you haven't already, we've got over 500, I think, registered through this process now, but within BGL, you can go to connect and then order documents. And what that will do is connect you between the 2 systems. And I'll just go to one I prepared earlier that takes you to this page. And then you have the ability to create a number of documents in here, from companies to super funds to death benefit nominations to deed updates. And the integration is embedded into the order process. So what I mean by that is that we will allow you, based upon the connection, to choose your fund from the drop menu, and it will pre-populate all the information, saving you a period of time and energy and effort. And where possible, we will then send that information back into Simple Fund 360 as well. So you can have a look. You can either order on a pay-as-you-go basis, or, which we do have a special deal for BGL users, or alternatively, we do have subscriptions that provide a significant advantage from a cost point of view. So Daniel, that's probably about it there. We do have a special offer. Yep.
A couple of questions. The slides, are you happy to make those available?
Yep, more than happy to do that. Yes, that's fine.
If the client has an SMSF, this is from Thursday.
Yes.
If the client has an SMSF, but he still has the super guarantee from his employer being deposited into his other super fund account, an industrial super fund, does he need to arrange for SuperStream? No.
So if the money's not going into the SMSF, then the SuperStream requirement is in the receiving fund.
And for you, Alice, this is from Alice there. Would the course cover off on QROPS's transfer?
So QROPS, no, we don't have QROPS covered in the course. We do have QOps covered within our trust deed and stuff though. So it is the course is a foundations level course, as opposed to being, QOps is far more specialist in its topic and content. Yep. So therefore, it's not something that we do. It's something that we would put into training ordinarily, but not something that we do there. So what we've done, because we've done a fair bit of work around RegTech and getting ready, what we've done here is if someone is interested in any of our document products, we are applying a credit towards CPD. So you may want to look at, subject to the level of documents that you may need. We do have a document calculator on our website to help you understand how many you might need. But what we do here is whatever the monthly price would be, we're going to basically match it with a dollar for dollar credit there that would give you, in essence, a $750 credit if you see the Smarter 250 documents, which would be positioned at $750 per month. So that is, of course, based upon a 12-month subscription. And we've got that available for people to consider up until the 31st of July. So a $750 credit that could be used to purchase the course. It could be used to attend a face-to-face event, which again, we're hoping to piggyback RegTech to do a half-day masterclass around Australia. It could be that you just want to subscribe to our CPD regular, which is our training to keep you up to date and run webinars each and every month as well. So again, you can go back and refer to that in the slides. As it's a technical session, I need to put this disclaimer in. It is, of course, based upon our understanding of the law as it currently applies. Daniel, that is it from me. We say simple and smart when we combine them together. We are both truly awesome, and I know you agree to that comment as well.
Speak for yourself. Now, one thing I was going to say that you touched on a topic, and I think it might be worth discovering at some point, is I'd love to dig into with you at some point some of the issues around just bulk document processing and blanket processing. Because I know that it does cause issues, and while it's nice to press a button and get everything populated, there are risks to it. So
absolutely,
I know with what you do, you provide a very personalized, customized service with the documents being reviewed, and you're a clear standout. So
and that really comes back to this slide I've got here. Correct. It's because we do pride ourselves on our specialization, but we acknowledge that technology plays a really important role. So how do we build solutions? And I remember when we first started this journey on the document process, and the discussions with Ron initially, and then once I got talking to Matt, it became very clear that Ron's idea and Matt's idea were very different. And therefore, it's about saying, how do we leverage the existing tech that we have, but do it in a way that can streamline and make sure that we've got a high quality outcome that actually delivers it through strong levels of technology. And that, that is really that level of extended thinking that we need. And we're now we are making a pretty sizable shift at the moment from being a document-centric platform to being a more client-centric platform in that regard, because it will allow us to manage the updates to deeds, to manage the updates to investment strategies, to manage updates to DBNs and the like as well, which will become really important, and how that information passes back into Simple Fund 360. And I'll continue to be a beta tester in many respects to ideas and comments back into Matt and Jeevan and the team to go, well, maybe if we could do this, and what that would mean from the client. And then obviously that gets put through the process of the sort of the beta tester group that sits there ordinarily. And we come up with ideas that clearly not only move these clients forward, but move an industry forward as well.
Yeah. Thank you, Aaron. And thank you
pleasure
to everybody that joined us today. A copy of the slides we made available. If you have any questions around the presentation or the services that Aaron is offering, either from a documents perspective or a training perspective, he'd be more than delighted to help you out. And I personally can endorse the products and services that he offers, because having known Aaron for such a long time, I know that it's a quality business backed by quality people. So thank you to everyone who joined us today. We look forward to presenting more of these type of things with you in the future, and we'll be in touch at some stage soon. So thank you, everybody.
Pleasure. Thank you, mate.
Thank you, Aaron. Just a question on here from Natalie Stacey.
Yep.
How much would it cost you to review an old deed and provide an update?
So the short answer is the review would depend upon how much work might need to be done. But in a very simple sense, from a deed upgrade point of view, you can see as part of this, there is what we would call BGL Partner Pricing. So, for example, a deed upgrade via our site is ordinarily $220, where through here it's $165. So what I should say is we do have 30 or plus documents through Simple Funds 360 at the moment. So if the document is not there and we continue to add to this suite, you also get that PAYG price on our own platform. So using the same login profile as you do through here, you can do it through our Smarter SMSF platform. And like I said, we are continuing to add documents on and add some of those historical documents on. So the pricing applies as a BGL client, regardless of the platform you're on, to be able to order those.
Yeah, perfect. Thank you.
That's all right.
I think that's about it. You got some nice feedback for once. Thank you. Great webinar.
Thank you. That was because of you, though, wasn't it, rather than me?
And nothing to do with me, mate. All right, we'll cut it off there, mate. Thank you so much.
No worries, pleasure. Thanks, everyone.
And everybody will get a copy of the presentation and the slides.
Yeah, and hope to see everyone at RegTech in October, including you, mate.
Well, hopefully we can stay out of certain word that
everything's crossed.
Yes. See you, mate.
Excellent. No worries. Thank you. Bye-bye.
Bye-bye.